Hi, I'm Rob Spanjaard, Chief Investment Officer of Rezco Asset Management. June quarter, it's time to do a review of what worked, what didn't, and where we see our clients profiting through to the end of 2017. It's a very uncertain time, so hopefully some of the things we can say and some of our thinking is of great value to you in trying to build your wealth and your clients' wealth. The past quarter has been fascinating from an investment point of view, particularly in the realm of politics. Now, often politics can get too much focus as investors. We can spend way too much time reading the press, reading this website, and we get ourselves in a huge spin, particularly as South Africans, but even as investors. Now, it is really fascinating because it's an ANC policy conference that had very different outcomes that are pointing towards the end of the year. On the one hand, we could have a very sensible, business as usual faction running the country. On the other hand, we can have something very different that is scaring a lot of investors. Now we need to deal with this. And we're going to unpack some of our thoughts as an investment house, how we're thinking around it, that hopefully can add some value to you and to your clients. So when you get into politics in South Africa and then translate it through what it means for investment markets, you always come back to the rand. What's your prediction for the rand? And a lot of our clients and investors say to us, what do you think the rand's going to do? We never know exactly the value that the rand's going to be in a year's time. And we don't try to forecast it. We're not trying to give an exact prediction. And the reason for that is if you're trying to be 100% right, you can also be 100% wrong. Now, we don't think that's something in uncertain times that investors really want to do. As an investment company, because we never know the exact value of the rand in a year's time, we construct a range of probabilities and possibilities to help us plan and invest our clients' money. Now, to encapsulate some of our thinking and describe it to you, we've constructed this graph. Now, you can see it has the rand running from 9 to 30. Look at the vertical axis. That tells you how probable that outcome is. But this is the critical point. There's this big gray area that you have to deal with. There's a range of possible outcomes that can be potentially very negative depending on who gets in at the end of the year. And we need to deal with it. We can put our head in the sand, so I don't want to think about it, but you need to have a portfolio that can handle it. Think about it in terms of probabilities. How do the politics impact the rand? We believe it makes a huge difference. And what's also very important is the context. If you've got massive flows into emerging markets, like we've had over the last year, the politics is negated to some degree. But if you have an environment with flows out of emerging markets, like you had during Nenigate, then you have a massive impact. Then the politics hits the currency hugely and we become very sensitive to the politics. Even in a neutral environment, the politics are going to start mattering. Apart from the rand, what's influencing our thinking in positioning our clients for the rest of the year? You look at our local economy, we think the shares, even though the PEs aren't, and the ratings aren't making the shares very expensive, in relation to where the economic growth is, they actually are expensive. And on top of that, there's no political risk factored in. So if you get nationalization of land, that's very negative for the economy. You want a political risk premium on South African shares. But even if the Zuma faction is out and the Ramaphosa faction is running the place at the end of the year, we think our shares are still in an environment of very difficult economy. So avoid South African-driven shares, shares that depend on the South African economy, because they're not cheap enough yet. Now, we have a methodology of comparing growth rate to how expensive a share is, and locally we're just not finding that value. If you look at earnings growth over the next 2-3 years, our companies are going to struggle because of the economy. So you don't want a lot of shares that are exposed to South Africa. Internationally, we find the opposite. We can find some fantastic companies that if you look at the earnings fundamentals of that company for the next 3 to 5 years, you're getting a real bargain. So there we heavily invested. So encapsulating our thinking on how we're constructing the portfolios and where do we outperform and where do we underperform, we've generated this picture, this graph. So you can see the green area indicates outperformance, and that is where we position for a negative scenario on South Africa. In other words, our shares get cheaper and the currency depreciates moderately. Our central forecast is a rand going to about 14.50. On the vertical axis, emerging market going from super positive, where we are now, to a more neutral area, neutral to slightly negative. That's the dark green where we actually do the best as a portfolio. So pulling it all together, locally, we're being paid to wait. So we have quite a lot of cash, a lot of our South African money still sitting in cash. We have got some exciting companies there, but as I said, a lot of cash. Internationally, fully invested, we think there's some really exciting bottom-up investment ideas, and we're prepared to, we'll make good money, we think, on those. Then with the currency, a slight to moderate weakening of the currency is where we positioned in our portfolios. In conclusion, it's good to see some of these investment themes that we have been tracking for quite a few quarters coming through and producing outperformance for our clients. So thank you for taking the time to listen to us and giving us the opportunity to talk to you about what we're thinking.